following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for unusual options activity alerts, advanced trading strategies, cutting-edge education, detailed market updates, and breaking customer activity. It's time for the One Option Show to rule them all. It's time for the Option Block with your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Options Insider Radio Network and show number 5 of the Option Block. And we're mixing it up a little bit today. We're bringing in a special guest panelist. He is Bill Luby. Some of you may know him from VIX and more. Bill, welcome to the show.
Glad to be here.
And since you are indeed on the show today, we're going to mix up our usual format. So with that, we will dive right into the interview block.
The interview block.
And welcome to the interview block. This is the segment of this show where we interview one of our special guest panelists. And today's guest panelist is Bill Luby. And Bill, whenever we bring someone onto the show, we always ask them a couple of starter questions right off the bat. So first off, tell our listeners a little bit about your background in the options business and how you got started in the whole tracking VIX world.
Yeah, I'm definitely not a lifer in the options business. As a matter of fact, before becoming a full-time investor, which has been my life for about the last 5 or 6 years, I was in the management consulting business doing business strategy work, and so I had a very fundamental view of the world that contrasts entirely with how I think about the world from an investor's perspective now. So I pretty much self-taught, never worked on an exchange, never made a market, never was employed by a financial services company. And my interest with the VIX really goes back about 4 or 5 years when the VIX was about at 9 and no one cared about it at all. And I decided that it was something I should look at because no one was looking at it. And I eventually started a place on the web blogosphere just to archive my thoughts. And surprisingly enough, a lot of people started showing up and asking me questions about it. And so eventually I kind of painted in myself in the corner of being somewhat of a, if not an expert on the subject, at least someone who is comfortable talking about it on a regular basis. So that's the short story anyway.
You know, you picked an excellent niche to paint yourself into there because from what we've seen on Options Insider going back years now, whenever we put VIX in the headline of any story, the click rate just goes through the roof. So if you're going to pick one thing to title your blog and to write about in the options space, the VIX was definitely a good one from an SEO and a traffic perspective, at least.
Eventually, but not when the VIX was at 9, yes.
So you pretty much started after they had already converted to the new VIX, right? You weren't doing it back in the old days when the VIX was kind of the abstract OEX product.
Yeah, before coming up, I really consider myself having two sequential lives here. My first life was primarily as a fundamental investor hobbyist while I was doing consulting for a living. And then in about 2005, I went full-time investor and started looking at indicators. And it took me a while to, VIX and I dated for a while, but it took a while before we were serious, probably late 2006. So, yeah, I really wasn't paying much attention to the original VIX, what now goes by the ticker symbol of VXO at the time. You know, I knew what it was, but I certainly had never thought blogging about it. And ironically, the reason I started a blog about the VIX was not because I was a VIX fanatic or anything. It was just actually kind of a joke. I wanted something, kind of a research project that I could sink my teeth into. And it was not really a part of my trading or part of my thinking. But since then, I've come around and I kind of almost think like I have a VIX-centric view of the world now from having immersed myself in that topic for the last few years.
So you're pretty much full-time trading your own money these days. Do you manage money? Do you run the ads off the blog? Or what's your primary income stream these days?
No, I'm a full-time trader. No more consulting. Trade only my own money. Really don't want the complications of getting other people's money involved. After a couple of years, I finally decided I should put some ads on the blog, and then readers started bugging me to write a newsletter, so I added a newsletter in March of '08 as well. So trading is still how I derive my income, and the blog and everything. That the newsletter is I shouldn't say for fun, but it's really more of a balanced way. It's something that's more social. It's more holistic, and it's probably healthier than sitting at a screen and back testing strategies and trading all day. And it allows me to have conversations like this rather than conversations with my monitor.
That's true. Staring at a screen all day isn't just the healthiest way to live. Look at Sebastian, for God's sake.
There you go.
The man looks like a walking corpse from all the screens.
Oh my gosh! Yeah, no kidding. Well, that's a combo of a 9-month-old and trading at the same time, which is a deadly combo. Bill, people associate you with the VIX, but anybody who's read your blog knows that you're not one of these people that talks about how the VIX is like this end-all, be-all of fear. Would you mind talking a little about some of the positives and negatives of, tracking the VIX and what its value and kind of what some of its detractions are?
Well, as I see it, there are really two ways to look at the VIX. One is to use it as an indicator, particularly a market timing indicator, and that's where the fear or anxiety portion comes into play with a VIX spike. And I think sometimes it can be an accurate representation of market fear, but sometimes that does get blown out of proportion. When the VIX jumps from 19 to 21, I think, talking about fear is a little bit exaggerated. And then there's this whole suite of VIX and volatility related products that for the individual investor means primarily these days VIX options and VIX futures for those who are a little more venturesome, but also the big hits have been the ETNs that have been launched with that are based on volatility products. Really, the underlying would be in the VIX futures, and we're talking about VXX, VXZ, and XXV. Those are the three. I'm sorry. I guess the other half of your question was pluses and minuses, or I think there's advantages and there's really those two sides of the fence. I think as an indicator, the VIX does a pretty good job of timing market bottoms. It's a lot more difficult to use the VIX to get indication when the market is overbought. So anyone who's been looking at the VIX ever since the SPX has been climbing from 1010 has probably gotten a couple of false signals doing that. But as an indicator, I do think it has a lot of value, either looking at it in relative terms, relative to, its 10-day moving average or Bollinger Bands or something, but also in absolute terms, whether it's at 48 or 30 or 25. And then the products, I think, are really fascinating, as there really are a new asset class for the retail investor, and you can use it as everything to hedge a portfolio, to speculate in market movements, or to do any of number of things that may tie in with other investments. The fact that it moves for the most part, 80% of the time inversely to the S&P 500 means it has a lot of interesting implications for portfolio balancing and diversification.
Bill, let me ask you this: what are some of your favorite strategies to trade? Maybe not necessarily on the VIX product, but maybe if you're using the VIX as an indicator and perhaps doing some do you do strategies on maybe the S&P if the VIX is at a certain level, or what are some of the specific strategies that you like to do based upon the VIX?
I do like trading VIX options and VXX options a lot, and there's some really interesting pairs trades you can do there. I'm not sure if we want to get into that sort of thing, but I really think it's an ideal product for vertical spreads. If you're really brave, you can try shorting, selling short some of the options, puts or calls, but I think that lasts until one or two VIX spikes, depending on which direction your play is, and then you'll see that if you time, for instance, the 10 or 20% of the year that the VIX is high or low, depending on how you choose to define that, and take a mean reversion approach and make a directional trade on it reverting to the mean. For instance, if the VIX spikes, you sell a call spread that's, at the money or slightly in the money a month or two out, you have a pretty good chance of making your money back and then some, as we near expiration. So I love fading the VIX spikes. I also like getting VIX as cheap insurance when the VIX is low, rather than necessarily play for a spike. If the VIX were suddenly to end up, say, at 15 next week, I would probably use that opportunity to buy some, assuming the entire VIX term structure were to come down a little, which it hasn't been. I would use that opportunity to buy some longer dated VIX calls, perhaps more as portfolio protection for some other long positions than perhaps as necessarily a speculative play. But those are some things that I think every investor can certainly look at.
Bill, you mentioned a couple of times now the VIX as a portfolio hedge, and we've debated numerous times on this show now the actual value of the VIX as a hedging tool. And we see a lot of this, particularly on the retail side. People coming in, they hear about the VIX, they hear about it being marketed as this fantastic hedging tool, and they come into sites like mine and others saying, hey, should I use the VIX as a hedging tool? Now, when people come to your site and they ask you that question, or when they subscribe to your newsletter, do you typically recommend the VIX as a portfolio hedging tool, or do you, what's your view on that, I guess, is what I'm looking for?
I should probably come up with a completely different term, and that would be so to replace the word hedge with maybe a counterbalance, because calculating an exact hedge, which you can do pretty easily with SPX or SPY, is much more difficult to do. And I'll try and turn off all my electronics here in a minute. It's much more difficult to do with a VIX because the VIX is so dynamic. So I don't like the idea of really using it as a hedge. And if I were to be, for instance, an institutional investor looking to get an exact hedge with the VIX, I think I might struggle to come up with exactly what it would take to hedge my portfolio. But if you're comfortable hedging a portion of your portfolio, or hedging your portfolio after it drops, say, a certain percentage, and you want to hedge any further downside, or perhaps be willing to accept some small losses, but then in a very large volatility spike, hoping to recoup not just those losses, but maybe even some profits, I think the VIX has some appeal. But the problem is it's extremely difficult to pin down what looks like maybe, a 5-power equation rather than some sort of linear programming question in terms of how to, maybe I didn't explain that well, but in terms of exactly how to pin down how much you need and how to use it. So I can see why you've debated it. I've certainly debated it in my own head, and I would not be comfortable using the word hedge as a recommendation. Partial hedge, quasi-hedge, counterbalance might be a better word, but because it's very difficult to be an exact hedge, I struggle with that.
Yeah, I think the point is for a lot of first-time VIX traders that VIX as a hedging tool is a far more nuanced concept than many of them have been led to believe.
Yes.
People approach this as a one-to-one instrument, and it simply doesn't perform that way. So it's good to hear that you fall in the middle of that camp like the rest of us.
No, I never use it as a hedge. I kind of have it out there. I would actually use the term counterbalance, because I don't ever think I have my portfolio hedged. And of course, you see some times where the market moves in one direction, the VIX moves with it. So your hedge is actually working against you, and that's not, that's not always a great situation.
Losing on both sides of it.
Exactly.
Well, yeah, you were mentioning at-the-money options and VIX term structure, and I think that's something that really confuses people a lot of times. Do you want to talk to, just kind of go over some of the foibles and pitfalls of trading the VIX options for newer traders?
Well, yes, I get more questions on VIX options than maybe anything, with a possible exception of VXX lately. But the first thing people do not realize is that VIX options are not based on the cash VIX or the VIX index that you see quoted on CNBC and everywhere else, but they're actually based on the VIX futures. They do converge with the VIX cash VIX at expiration, but that really doesn't help you when your expiration is 30 or 60 days out and the two are moving in different directions. So that's number one. And I get lots of questions now. There are people who don't even bother to do the research to figure out that, the VIX options got to be options on the VIX index, right? The other thing is the expiration cycle. There are quite a few people who trade it for the first time, and suddenly this Wednesday appears and their position disappears. They did not realize that the VIX options expire 30 days before the SPX options, which will fall on a Wednesday. We just had them expire today's Thursday. That was yesterday, and so they also had this very strange settlement, which probably isn't worth getting into. But they settle at the open. But it's even more crazy than your typical index option settlement. So the last traded on a Tuesday, settled on a Wednesday, cash settled, and based on the VIX futures, which many retail investors can't find good quotes on. So until you can do all those things, I would be careful about jumping into VIX options until you understand that and can get some good VIX quoters. Understand the VIX term structure, as you have, right now. Let me just pop up the VIX futures here. Right now you have, well, the October's just scrolled off, but right now you have everything from it's no news. I don't have settlement dates, but from the low 22s for November to the just about 30 for the May 11s, 2011. So you've got a range of 7 to 8 points right now, and then depending on where you are in the term structure, you may not realize whether your option is actually in the money or out of the money, or trying to get in a calendar spread when you have a steep term structure. Just some very crazy things can happen. So they're a very strange and unusual product, and I must confess, I struggled with them for about a year and a half or so when I first started trading them, and only now do I think I've had a handle on them for a reasonable amount of time.
You're definitely an inspirational story to our audience. Just think, you too can go out there and become interested in the VIX and start a blog, and the next thing you know, you can have a popular blog on the subject as well.
And I think trial and error is actually a valid way of approaching some of the stuff, as long as you only commit a small amount of money to figuring out, how expensive your trial and error is going to be. But until you actually buy the stuff and watch it and see what happens and see how it moves, you probably won't fully understand it. It helps to read blogs and articles and listen to interviews like this, but sometimes you just have to dive in and learn on the run.
Well, Bill, you actually put a nice post up on the VXX today. Just kind of looking on your website, vixandmore.blogspot.com, and I think you really go into detail, and it sounds like you're about to go into some serious detail on a lot of the problems that are starting to become well known about the VXX. You and I think we're lamenting that we were shocked that it's still not hard to borrow. Some of these problems with the VXX, which, if you want to briefly touch on, fine. Do those exist within VXZ and XXV as well?
XXV is a very strange one. So let me start with the comparisons of VXX. Talking about the VIX term structure, you look at the first 2 months, and VXX is essentially a portfolio of front month and second month VIX futures that's weighted to have a constant maturity of 30 days. So as we move along the timeline, unlike futures where it gets nearer and nearer, you have a weighted average of 30 days. So depending on the slope of the term structure, and about 80% of the time the VIX is in contango, you're losing money when the first day, and this happens every day, there's a daily rebalancing, when the front month options are sold and the second month options are bought. And when you have a steep term structure, as you can, if you look at the chart I posted, it's very easy to accumulate 10 or 20% losses per month, and most of that is contango related. That's the term structure. When you get out to VXZ, which targets a 5-month maturity, and they own 4, 5, 6, and 7-month VIX futures, they keep rebalancing them on a daily basis also, but by then, more often than not, the term structure is virtually flat. So in terms of a net loss from contango or a net gain from backwardation, you really don't have any of that. So what you have is a pure play on volatility. On the flip side, what you don't get is you don't get much movement. If the VIX were to jump from, say, 22 to 30, you would expect the front month or the second month futures to move maybe half that much, 40 to 50% that much. But when you look 5 months out, you might only get capture 5 to 10% of that movement max. So the VXZ is a much better long-term hedge. Doesn't have the contango issue, but you really need to use a lot more to buy a lot more units, if you will, if you want to have that same sort of volatility hedge. So it's going to cost you a lot of money to get the same size hedge from that movement.
Well, Bill, I know all of us could sit here and pontificate on the VIX for quite a while. In fact, we've done it on several shows before. But I know if we keep going on this, we won't be able to get to any of our other segments. So thanks for coming on. You're actually going to stay on throughout the entire show, so we'll be able to chat some more. But for now, we're going to move right into the trading block.
The trading block.
Welcome to the trading block. And by the way, I probably should have mentioned at the top of the show, but I am, again, dialing in from poolside here, which is why my audio is probably less than scintillating. But, yeah, we're going to dive into the trading block today. And it was an interesting day on the street today. Looks like we started off really strong. The Dow was surging. S&P was surging. 1 point, Dow was up about 106 points. It was actually had eclipsed its 2010 high. S&P was holding strong over 1185. And then it kind of gave up the ghost, and they all pretty much, indices closed around unchanged on the day, partially due to the fact that the dollar started rising and it gave stocks a bit of a hit. Bill, I'm sure a day like today was interesting from a VIX perspective, so why don't we start off with that then? What interesting activity did you note in the VIX today as the market kind of swung back and forth?
Well, I was following VXX more than VIX today because that's why I generally like to see where the retail investor is going. The VIX didn't do anything outrageous. It really didn't spike very high. What did it hit? Went up to 2053, ended up down. I was interesting to see when you've had a big move like that, a market up big early, and when you make it back to even, it's interesting to see at that point if the VIX is already anticipating that trend to continue and it's already up for the day, or whether it's still kind of lagging in positive territory. And it looked to be rather understating that move. There wasn't any sign of panic today. So I wouldn't say that it was necessarily a signal to go ahead and buy on the dip, but I did not see anything that looked like panic, specifically related to how the VIX was moving.
Last show we talked a lot about IBM and Apple plunging in the after hours, and that certainly came into play yesterday when we saw the market open lower after all those earnings announcements kind of play into the after hours. But today, we saw a little bit different story on the market. Anything else you guys were watching that was pretty interesting, Mark or Mike or John?
I was looking at I have a very shocking announcement to make today. Gold and silver actually went down a little bit on the day. I couldn't believe it. So I was looking at it today, and the oil had a little bit of a pullback today. It seems that oil just doesn't want to go above that when it gets to that 85 level. It just seems to be pulling back. So a little bit of a pullback in commodities, and it'll be interesting to see over the next week or two if this is just a pullback to a greater rally or whether we are at a reversal in this.
The one thing I saw that was kind of interesting was in the ETF FXI, which is the China index. There was a massive amount of put buying today. Pretty unusual amount of put buying, actually, if you were to ask me. Kind of on an open interest scale, generally kind of the whole market right now is a little leaning toward puts. I think just we're still kind of getting over the frustration and kind of the fear of 08 and 09. From an open interest perspective, the put to call ratio is about 1.5 to 1. And today we saw puts trade on a ratio of about 6 to 1 in the calls. And so it was, kind of interesting. We saw a lot of, just general put buying in China. So it'll be interesting to see. We know there's a lot of different things going on between China and between the United States and between kind of the world economy. So it's interesting to see this type of paper flowing in on FXI.
Well, sort of makes sense. China just came out and announced that their economy isn't exploding through the roof as everyone kind of assumed, which is actually a good thing in the long term for the rest of the world. But I think they grew at, 12% in the most recent numbers. Of course, who knows how trustworthy these state-run numbers are, which shows a little bit more modest growth than a lot of people expected. So maybe that's what's driving a lot of this put buying. This would probably be a good one for the odd block, but I pulled it up while you're talking here. It looks like we have about 50,000 puts versus 8,000 calls on FTSE today.
Mm-hmm.
Ironically, they were still below their average daily volume. They usually trade about 62,000. They traded about 58,000 contracts today. So, but from an open interest perspective, I see what you're saying. Yeah, it is pretty interesting.
Yeah. So that was kind of the only thing I really saw. So
maybe with that, then, since we ran a little long on the interview block, but it was pretty interesting.
It's pretty interesting. That was captivating and fascinating. That was a notch above watching Murder, She Wrote.
It's hard to top Angela Lansbury. When Sebastian says you're better, I mean, he's president of the Angela Lansbury Fans Club. I'm not sure if you know that.
I am.
So when he says you're better than Murder, She Wrote, it's only one notch below better than Golden Girls in his.
Yeah, well, I've got optionpick.com and I've got www.mrspotts from beautyandthebeast.com. And that's my blog about Angela Lansbury.
One day when we have to fill time, maybe we'll let you read some of your Angela Lansbury fan fiction on the show.
Oh.
not the blue stuff, but some of the family-friendly stuff.
Yeah, well, you should. I actually recorded a full commentary to Bedknobs and Broomsticks that you can play in your CD player to go along with the movie. So
show turns so wrong sometimes,
so quickly too, doesn't it? I mean,
yeah, I know. All right, and with that note of nonsense, we will move on into the odd block.
The odd block.
And welcome to the Odd Block, and this is the segment of the show where we discuss some of the interesting and unusual options activity that's coming across the tape today. And we're going to start off with good old Saks Inc., not Goldman Sachs, but the actual department store chain, SKS. They closed around 1064, up about 5%, because of rumors that another group's coming in. I believe they're called Todd Group, TOD. They are going to come in and increase their stake in the chain to about 20%. So obviously people think that's a bullish move, and it might lead to a complete takeover of Saks down the road. So we saw Saks set a new 52-week high today, and is trading at levels it hasn't seen since 2008. Not surprising, we saw a lot of opening options activity here in the bullish area with call buyers dominating the Nova 11 and D's 13 strikes. We saw multi-exchange sweep orders actually coming in and picking up about 2,000 contracts of the Nova 11s, and then a few minutes later we saw another sweep order come through, picking up about 2,000 of the December 13 calls as well. So that put the total activity on the day to about 3 or 4 times SKS's normal daily average of volume. And not surprisingly, calls were 10 to 1 ahead of puts on this one. So, but a lot of bulls moving into Saks thinking this is kind of the prelude to a takeover. And these D13 buyers are obviously fairly optimistic that Saks is moving north. What about you guys? Any you guys watching the retail sector today?
Yeah, this Saks bet is interesting because, when you pay 20 cents for the D13s on a $10 stock, you're basically putting a flyer out on a buyout. I mean, there's really no other answer beyond that.
Yeah, pretty much.
Yeah, there's a couple other retailers. There's a lot of rumors of consolidation in the retail industry. I've heard a lot about AEO, which is American Eagle Outfitters, Talbot's. My mom would be crushed if Talbot's.
Don't forget Chico's.
And Chico's! Good old Chico's. That's my mother-in-law. So my mom loves Talbot's. My mother-in-law loves Chico's. And between them, they're both wearing a lot of purple. But yeah, we've heard there's a lot of rumors of consolidation in the retail industry, and Saks actually makes a lot of sense for certain types of retailers because there aren't a lot of retailers that actually compete with a company like Saks. They're a big step above probably like a Macy's or even a Lord & Taylor. And, my wife, who happens to be in the fashion industry, she views them as a step above even like a Nordstrom, which might surprise you. But that being kind of seen as that kind of high end, purchasing them at the bottom of an economic downturn, might make some sense, and it actually might be a signal of things turning around. You don't buy Saks if you're expecting another 3 years of horrible retail sales.
Yeah, that's true. I'm not familiar with this Todd Groups, and maybe they own other retail franchises. I'm not sure. But for whoever they are, they're definitely putting in a large footprint in Saks, obviously thinking good times are ahead for the rest of us.
I heard an interesting anecdote today that Bergdorf's, which is about as high end as they come, is seeing some very nice sales pickup. And it's interesting to see if that end of the market is heating up, that has some interesting implications probably throughout the whole retail value chain. So
these high-end retailers tend to trickle down a bit. Once they start picking up, then the middle-level guys start picking up. Then next thing you know, Tucsaw's favorite, the dollar store, is just bursting at the seams.
I don't know. I'm kind of like in Coldwater Creek today with the clientele we're in now.
Yeah. Well, actually, in an economic, if we're at the bottom, wouldn't you want to put up a pairs trade where you would sell FDO or something along those lines, and then buy a combo of Talbots, Chico's, Saks, and JWN at the same time, and put that on as a pairs trade? Might be an interesting little bet. So
the unwinding of the new normal trade, yeah. Yeah, when I heard that Walmart was having, wasn't going to have a great year, my first thought was, maybe that's a good thing. People are actually ready to go spend where they used to be spending.
We can contrast this activity to what we talked about a week ago with all those takeover chatter for the dollar stores, and maybe they've hit their peak now, and maybe it's time to swing the other way on the spectrum and start loading up, like this guy in the D13s, start loading up on the upside in some of these premium outlets instead. Moving on to another, I guess you could say, a niche end of the retail spectrum, Radio Shack, or in their hipper version, the Shack. And they closed around $22.85 today, up about 2.5%. And this one kind of picked up because we saw a lot of bullish activity today as well, and a lot of options traders came in looking for some significant upside movement in this stock. They picked up about 2,600 of the November 26 calls, which is interesting for a couple of reasons. First off, the previous open interest on this strike was one contract. So this was all opening coming in on the Nov 26s, and about 1,200 of those, or the bulk of them, went up for about 26 cents a piece. It was a variety of prices. It looks like the majority were around 26 cents. And these people are looking for a break even somewhere over 26 by November expiration. We also saw a lot of people diving into the Nov 25s, the 1,500 of these ones changing hand, again on a strike that really didn't have much activity prior to this. It had an open interest of 164 contracts. So a lot of bulls coming in and thinking Radio Shack is gonna pop. They have earnings coming out on the 25th before the open. So these guys are obviously coming in, putting on some bullish plays ahead of earnings in a couple of days here. Any of you guys watch the Shack?
You don't think they're a part of maybe a buyout as well? Because I mean, who shops at the Shack these days?
Howie Long, Terry Hatcher.
I think even those commercials are about 5 or 10 years old now.
That guy from Police Academy, right? I mean,
Steve Gutenberg.
Yeah, Steve Gutenberg. He's there. I saw him.
But yeah, I've never known what the hell the Shack was for. Then you go there to buy batteries, maybe some cables to hook up your stereo equipment or components. But aside from that, I mean, no one's going to the Radio Shack and buying, a desktop computer these days, or even, a lot of consumer electronics. Maybe you buy a cell phone there. They sell cell phones now.
They do a big cell phone business. They're not as much selling to me, but they're selling to guys like my dad and stuff like that are, maybe a little less phone inclined. And what they have is kind of this special electronics. But, I've been hearing rumors about them getting bought out for a long time. I'm not sure quite who would be a suitor, maybe a private equity group. Probably would make more sense than a public company, because I'm not sure who they'd mesh with. I don't think they'd work with like a Best Buy or anything like that. Any thoughts on who would be a good suitor?
I got to agree with you with the private equity. I mean, Burger King just got bought out, and I could never imagine them being taken over by another franchise or another competing fast food service place. But in comes, was it Bluestone, or private equity group takes them on. I mean, that's what I see of Radio Shack. I see them disappearing for a couple of years and getting chopped up and resold.
There's a couple of ways you probably can go with it. It could be a real estate play because the chain's on the downward turn, but they still have outlets in every town in America. So if you want a footprint or maybe to take a position on some some long-term commercial real estate, that might be a way to do it. Or maybe for a Best Buy, Best Buy does do a lot of those Best Buy mobile stores in malls, and I could see that would probably be a good fit for the existing footprint of a lot of these Radio Shack stores because they are relatively small. So you're not going to put a full Best Buy store in there, but you could do the Best Buy mobile, Best Buy kind of express thing that they have where they sell, DVDs and CDs and cell phones and kind of put that in there. I think Kramer said it best for Radio Shack back on Seinfeld when he said, why do they ask for your name and address when you buy batteries? That's pretty much the summation of Radio Shack. Everyone who goes there kind of scratches their head. But yeah, a lot of bullish activity going on up there as well. So it looks like somebody somewhere is thinking there's some potential upside for Radio Shack. And moving on into an interesting size play going on in Motorola, getting out of the retail sector and into the specialty electronics sector. Motorola closed at $7.80, down about 2% today. And we saw a pretty sizable buy right coming in. This trader came in and actually sold 21,000 of the Jan 7.5 strikes. So these are actually in the money calls. And he sold those at 65 cents a piece, and he did it as a buy right, not delta neutral. So he actually went out and bought a full 2.1 million shares against it, with the stock at 781. So you can look at this a couple of different ways. And one of the reasons I want to bring this up because it's a good trade to explore the different ways to approach a strategy. And in a nutshell, this person essentially synthetically sold the put on this strike. But there's a lot of different ways about why he might have wanted to play the buy right game as opposed to naked selling the put itself. Because obviously when you're going a buy right, there's a lot of capital investment and a lot of capital being tied up in buying 2.5 million shares to do this. And so I'm looking at the Jan 7.5 puts. They were trading, I think, about 36 cents. So the way he did it and legging into this buy right might have actually been the better way to capture a little bit better premium. If the stock rallies to about 750, which is where obviously his maximum profit is, he'll pick up about 5% on this trade. So it's an interesting trade overall, but you don't see this many size buy rights going up anymore just because it is such a capital intensive trade. And I don't know, Tusaw, what do you think about doing the buy right out here as opposed to maybe hitting the put instead?
Well, it's one to where, maybe it's, if it's something this size, could it be possible that maybe it's like a buy right fund to where the objectives of the fund strictly dictate that it's a buy right only, even though we understand that short and a put and a covered call is the same thing, but maybe that's part of the objective of the fund is one thing that I would be thinking, and that perhaps they're not necessarily looking to use any of the lesser requirement on the short put to where the capital intensiveness of this really wouldn't be much of an issue. Those would be my thoughts on it. And Motorola, it's a very well-known company, so I would think that in terms of picking to do the buy right as opposed to selling the put, that would be the reason that I would think on it. Because typically when we start usually our opening move with trades like this is to sell the put to get into the stock, and then once we're in, then we would start selling calls against it. I think that's fairly common with people who do it that way, so to speak. So yeah, I think it's just kind of a fund objective type thing.
But yeah, these funds usually have these restrictive covenants that would probably limit them from doing what would probably be the more cost-effective trade. If you can get off 21,000 of the 7.5s, you can get off 21,000 of the puts as well, so it's not a liquidity issue.
I actually was talking to a mutual fund that was exactly that today. I was talking to the manager, and he was just explaining to me, the SEC doesn't quite grasp it, but the way the rules are, he is only allowed to buy puts and to sell covered calls. With the way the fund is written, they're actually funds that aren't allowed to delve in options, even though done properly, they're a great risk management tool.
Yeah, this gets back to a lot of the problems we have with the SEC and with the options regulation in general, just that they are so far behind the curve on this kind of stuff.
They are making progress with this, so that's the good news about it.
And I think we're going to close out today with another interesting specialty firm, H&R Block. Talked about them a few weeks ago. They had some interesting activity. I know, Sebastian, you've been watching this one a lot today, and you said there's a lot of put buyers coming back to play in HRB today, huh?
Yeah, well, this is a really interesting one. A guy, maybe it could have been a woman, a trader with a big axe to grind came in and bought 13,000 of the Jan 2012 2.5 puts, okay, and paid 40 cents for them. This is a stock trading $10.62, and this guy paid 40 cents for the Jan 2012 2.5 puts. And I just thought it was a really interesting trade. Now, I don't know a lot about H&R Block other than the fact that I would never pay them to do my taxes or get a loan from them. But what I do know is that there's only two reasons why you would buy these. Is one, you're a huge stockholder and you're afraid of this company going out of business, or probably the more likely scenario, you're a huge bondholder and you're worried about this company going out of business. This is something we actually saw in General Motors. When I traded General Motors on the SIBO during 06 and 07, and we saw General Motors trading $25 to $30, and we have these customers coming in buying the $5 and the $2.50 put for 25, 35, 40, 50 cents, and we couldn't understand why. And it turned out that down the line, it was a big bondholder that was hedging his junk bond position. I'm wondering whether that's something going on here.
That's really interesting. I mean, the choice of month and strike is obviously very interesting. Obviously, this guy is not thinking H&R Block is going to wear the dodo anytime soon. He picked the Jan 12s to do this. But yeah, that's a very interesting play going up out there. Obviously, this guy is thinking the worst is still ahead for H&R Block, and severe worst. I mean, this guy picked about as low as he can go on the food chain here.
Bill, you were kind of looked at this stuff. I mean, what other reason do you think somebody would come in and do something like this?
Well, first thing I do is pull up the chart, and I notice the stock is already down 50% this year, and that's that takes quite a lot of talent right there. But the bondholder theory is an interesting one, but why I still can't figure out why you would do that instead of going the credit default swap route. But maybe that's I don't know. This doesn't make any sense to me unless this is someone who's having Lehman nightmares or something. I really don't know.
This is an odd hedge. When you're hedging from 2.5 to 0, it's almost like, what's the point at that point?
If I was on the floor, I would have been paying 40, and the guy paid. The crazy thing is that the guy paid 40 cents. Okay.
Yeah, he didn't work it at all.
Whoever his broker is must really be.
Fire your broker, says John from Options Express.
He must have been really convincing, because I'll tell you, I would have sold as many of these as they possibly would have let me, and then bought like the Jan 7.5s, the Jan 5s, the Jan 10s, or maybe even stuff against it. But getting to sell, what volatility is that offer? That would be
108 or something like that. Yeah. Right.
Yeah. Well, no. Yeah. The IV, the center IV, which is about 35 right now, 32.5, be about 107. So based on the vega of this option, it's something like 120, 125. It's relative to every other strike out here. That's just astronomical.
Just from an execution perspective, this guy obviously wanted to get done right away for some strange reason.
Yeah.
I mean, but he obviously doesn't think it's happening tomorrow. John, wouldn't you have probably put in like a 25-cent bid and let the crowd lean on it for a week till you get filled? I mean, there's obviously no rush to get this done. Why would you pay up to 40 cents?
Yeah, unless he knows something, like Mark was saying, or unless he's very scared that something's right around the corner, even though we're heading into the early stages of tax time, I guess, with the end of the year wrapping up. But we definitely would suggest that you work this, let some people sell some premium. But how many did he do? 10,000?
13,000.
I mean, 13,000, maybe, he wanted to get it done, just pay up. Sometimes I hear people and they're aggressive and they go for it. But on a retail, you're working on the 50 or 100 lot. Yeah, we're definitely working in between the bid and ask for just best bid and letting some people take you out for premium sellers.
Yeah, maybe he thought it was happening tomorrow. He could have bought the Jan 11s for a nickel, paid up and got them for a dime. I mean, the more you parse this trade, the less sense it makes.
Well, the interesting thing
here's my theory.
Oh, sorry. All right, Bill.
No, I was going to say So the Tea Party's coming in. We're going to have a flat tax, and it's a congressional staffer who's gotten the word and has decided that since there's no laws on against insider trading, I'm just going to go for it.
There you go.
And there it is. There's our breaking news right there.
We figured it out.
Didn't we make that joke about the flat tax and HRB last week? I think Bill's been listening to our show secretly, stealing our material.
Yeah,
Fortunately, I have Alzheimer's, so I can claim innocence.
And with that interesting, very interesting trade to chew on, and that's probably the definition of the odd block right there. That's a pretty odd trade.
Yeah.
And with that one, we will close out the odd block, and we will move on into the express/spread block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futures risk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the express/spread block, and this is the part of the show where we discuss some of the interesting activity that's coming up on the Options Express customer book. And John, what are we seeing today over at OX?
Today, this week, we've had a lot of talk about currencies. People want to know how to get into currencies. They want to start trading currencies. Tuesday night, People's Bank of China raised their benchmark interest rate by 25 basis points, which is the first time in 2 to 3 years. So it sparked a lot of discussion, a lot of debate on what's occurring over there. I think at the same time, it seems to be China is kind of flipping their nose at us. They cancel the exports for precious metals, which the U.S. needs to make certain military products and certain advanced technologies. China has about 95% of the rare earth metals in the world, so it's kind of a snub to the U.S. To the country. But so people are calling in and say, how do I trade currencies? Well, at Options Express, we trade all the futures. Now you're saying, okay, yeah, I know there's the British pound, the euro currency, Canadian, Aussie dollar, but we even trade some of those more obscure ones, like the Polish zloty. Is anyone aware what the currency of New Zealand is?
That's my favorite, the zloty. Don't you mock the zloty. Putting my kid to college on the zloty.
But the New Zealand has a kiwi. We also trade that. People say, hey, I'm not familiar with futures. I want to get into something similar to like equities. They might go into the ICE has a world currency options. The PHLX, which seems to be the more popular one, has the main 6 currencies: Aussie dollar, yen, euro, pound, and 2 other ones, Canadian and one more, Swiss franc. So we do get a lot of people calling there. I want to trade currencies. How do I get in them? Those are 2 ways to do it. We also have, many people will say, how do I get into the dollar? I want to trade the dollar. Well, we have options on the dollar index. We obviously don't trade dollar index futures. They don't exist, as don't the SPX and the DJX. Still pit traded. So a little bit of a back to the future reference. Calling down to the floor to get quotes, canceling orders, waiting 5 to 10 minutes for them to come back.
The good old days.
A little bit. Yeah, the good old days. I'm actually going to be on the floor of the Board of Trade tomorrow, taking some people around, so get to see how they did it back in the day. But so there's another way you can take advantage of moves in the dollar. What did that 25-point basis raise do to the markets? We'll take a look at some of the charts. The dollar had a move by at least I think its biggest move in about 6 to 9 months off its lows. Hence, it reversed it the next day, so it really didn't last. But take a look at gold. Gold was off by more than $48 that day. People react to things that are happening overseas, and you can make money on that. If you're not familiar with trading the currencies, just give us a call. We'll go through it with you and explain, the risks and benefits of trading these types of instruments. And I'm sure there's a ton of ETFs on the currencies out there these days. I'm more of a commodities background guy, so I kind of stick to the futures and options on the futures. But there are definitely plenty of ETFs that also take advantage of these currency moves.
Hey, John, you mentioned the world currency options. Would you say those are more popular choice than the ISE FX options? Is that what you're seeing a lot more interest in these days?
Absolutely. 1 out of every 10 calls is about the ICE. That's a product that's probably not going to be around much longer. Felix ones just have, I believe they're cash settled. They have a denominator similar to equity options. People that trade equity options can seamlessly move over to those Felix world currency options and trade them with ease. I'm a fan of them, and so is the retail clients as well.
I will say this for the ICE, though. They do have my all-time favorite ticker symbol for their yen, YUK, yuck.
That's a good one. I like that.
I do like
so,
that.
And I like the ICE currency options. It's I like them both. In that I'd like to see the ICE one stick around, but I agree in the retail world it does seem that the Philex does seem to be taking the lead on that one. But the thing that I like about the ICE, Steve Meisinger and the guys over there, they do a great job with educating the masses on the product, and it just for whatever reason, they're not taking off like I wish they would.
Yeah, they're putting a lot of resources behind promoting those products and getting the word out about them. So I would hate to see the FX options fold as well. But it seems like the world currency options they're dollar denominated, whereas the ISE is kind of the inverse. So I think that catches on a little easier with the retail.
Well, that's the thing. The ICE did release some of the inverses, so to speak, but it seems like they were late to the party with that.
Yeah, exactly.
That was their big mistake, making them all dollar-based.
Exactly. That kind of hurt them in the long run now.
But Bill, I was going to say, if you ever had to branch out from your, VXX and your VIX, the world currency options might be one, because we do get a lot of questions on that. That might be your next blog, your second website to say.
Well, it is VIX and more, so that could be the and more.
Well, you could change it to Fix and more. They're not all winners, sorry.
They're not. They can't.
Time for the yuck there.
Yeah. Besides the currencies, I mean, it feels like a busy week. The momentum right now. We've had a very good month at Options Express. I think the other brokerage firms are as well. Summer seemed to creep over into September, and we really didn't get back into trading to October. But we had some earnings week. We had Apple on Monday, I believe. But if I'm going to choose to talk about one, a lot of people have been calling in about Netflix. And the reason I like to talk about Netflix is I get to ask Sebastian, what's in your queue?
I don't know if we want to go there with the adult queue of Sebastian. I don't know.
Yeah.
No, but anyway, what do you got? What's lined up for your next?
Chitty Chitty Bang Bang, Bed Knobs and Broomsticks, the original Freaky Friday with Jodie Foster, and then Tu Wong Fu with Love, Julie Newmar. What else? We got a few other ones in there.
You knew he wasn't going to be shy on that one.
Not at all. But Netflix reported third quarter profit, $38.70 a share. Initially in the aftermarket, which you can trade at Options Express, a lot of people call in. They say, "Hey, how do I trade options before and after market?" Well, it doesn't exist, but you can trade the underlying security before and after the market. So we had a lot of volume in Netflix after the reported earnings. Initially, it looked like Netflix had pulled back. They were down about $8 to $10, and then spiked up and remained up the following morning. They were up about $20. So I mean, this is a stock that really has not pulled back at all, and it looks like it's going to continue, to go higher. We even had some rumors, and maybe some of you can help me out with this, but that Apple was looking maybe to buy them out or to take them over.
Well, they're definitely competitors now that Apple is reinvesting in the Apple TV. But it looks like Netflix has eaten their lunch. They got everywhere first. Netflix is on the Xbox for streaming. It's on the Wii, for God's sakes. Everyone and their mother has a Wii these days. So they kind of phantomed their way into every house in America now. They're on every device, whereas you have to go out and buy an Apple TV to get that. So they seem like they're definitely the one to beat in the streaming market. And I think everyone knows that we're heading towards streaming as opposed to putting DVDs in the mail.
I figured with Google TV having their announcement over the last 2 weeks that they were coming out with a standalone version of their Google TV, and to compete with Netflix and Apple TV, that would slowed down, the momentum of Netflix, but it's only done, the reverse and just, it's just taken off.
Yeah, they're still a niche player. I mean, we got, what else? You have the Roku box, you have the Boxy box. All these things can stream Netflix. And I think 4 TVs from Sony can stream Google TV, So if you want to bet on one horse to win this race right now anyway, it's definitely Netflix. They've been building this infrastructure for a long time, and they're looking to go pure streaming pretty soon. The market agrees. Yeah, they're up $20, almost 13% today. So a lot of bulls still thinking there's a lot of room to run in Netflix right now, including some Options Express customers, apparently.
Yeah, absolutely. I mean, it seems like the Options Express customers like to play the volatile stocks, Netflix, Apple, Google, Baidu. A lot of people writing condors on these things and selling vol. I mean, I'm a big vol seller. Bill said earlier in the show that he seemed to be more of a directional player when it came down to the VIX because, 4 out of 5 months you do find selling vol in the VIX, and then you have that VIX spike and you get wiped out and your trading career. But it seems on the equity side, some of the better traders, some of the ones that stick around the longest are premium sellers. If not familiar with that, you're selling a little bit. It's gonna not bring you. It's not a shooting star trade. It's not going to make you rich overnight, but it's consistency with letting these options expire worthless. And the upside is you have no commission on the way out. You let them expire worthless, and you get to keep the full premium.
Hey, John, this is a bit of an aside, but I kind of want to throw it out there to you while you're talking about this stuff. I was chatting with some reporters today about the penny pilot and its impact on the options market, particularly the retail sector, and we were discussing how the retail guy is faring. The obvious assumption is that the retail guy has benefited from tighter spreads and that sort of thing. But for the higher end of the retail option spectrum, particularly a lot of people who are trading Options Express, the guys who are doing condors and that kind of stuff, we're seeing a lot of feedback now. They're starting to be impacted the way institutional guys used to be, where they're putting on these 3 or 4-legged spreads, and it's getting harder to execute these things. You have to work them more aggressively. They're being left open on a few legs. Are you seeing that feedback as well? Are you starting to see some pushback from the retail guys that maybe the penny pilot wasn't the best thing in the world?
The retail people that are just doing outright puts and calls love it. I constantly hear them complain, well, why isn't this one a penny, a penny increments or a bid-ask spread of a penny? But I got to kind of agree with you on the condors, on the credit spreads. It seems they have to reach out a little bit more and kind of, because the market makers, the DPMs, are not wanting to give up that edge that they have that's quickly diminished. So doing condors, yes. I mean, whereas you were able to get filled right between the bid and ask, now you're leaning towards the bid. And Options Express, you're not going to fill one leg and not the other. I mean, they're all getting filled, but you're seeing more partials, and you're having to reach out there a little bit further to get those orders filled.
It's funny because that was considered to be a first world problem just a couple of years ago. It was only institutional guys who were coming up against that ceiling. But now when you got so many stocks a penny wide, 3 by 2, even your retail guy is going to have trouble getting filled and that kind of stuff. 8
different exchanges at that with one, with a new one every other month.
Yeah, and this is what you get when you basically say, hey, we don't need market makers anymore. We're going to just allow the big houses to control the paper flow. Well, guess what? Bad news for everybody. The big houses, they have no need to come in on a bid or an offer. They can sit there and wait. Heck, they're probably working the paper flow anyway, so they can wait for your guy to pay up because they know they're going to get that order no matter what. So it's really interesting the way gutting out in many ways gutting out the small competition has actually widened out the markets. So, that's kind of my thoughts.
It's just interesting to see that this is becoming much more of a retail problem than it was just institutional a couple of years ago. Anyway, I didn't mean to hijack your expression.
Not at all. Great question as always. And then tomorrow there's not much even on the economic front, so we're thinking it's going to be a quiet day tomorrow after 2 hours of trading, and people are going to wind it up and head home for the day. That's about it on my end.
All right. With that, then we're running a little bit long, so we'll dive right into Around the Block.
Around the Block.
And welcome to Around the Block. This is a segment of the show where we discuss what's on the horizon for us. And as John just said, there isn't too much on the horizon. It's mostly earnings. We are in earnings season, so everyone's looking at earnings. So what are some of the interesting earnings you guys are looking at for the next couple of sessions?
Verizon and Honeywell Friday morning.
Mm-hmm.
Well, I can hear some silence over there, so I just let me jump out and say that Options Express has a earnings calendar on the website. You can do it search by week, search by company. Real easy to find as I try to navigate to it. Today's the 22nd, so tomorrow's 22nd. I mean, Bill said Honeywell and what else?
Verizon tomorrow morning, I think.
Yeah.
No economic numbers and a couple of dogs.
Yeah, there's no big numbers, and Verizon, I would imagine they do all right. Of course, they are getting the iPad finally, so that'll be a bump for them. I think the Droid X is doing fairly well, judging by the number I've seen out in the wild.
Oh, yeah.
My own anecdotal usage, it's definitely doing all right. So, I don't think Verizon or Honeywell are going to move the market by any means.
There's about 30 to 40 of them are, and I don't see any big names up there at all.
Next week we got some biggies. We got Amgen coming out. We got a lot of just a whole bevy. Next week's kind of the big week for earnings. Maybe not as many really large kind of names, but a lot. The overall majority of kind of the middle market names. I think we got Microsoft next week too.
There's a huge brokerage firm has earnings next week, isn't it? On the 26th.
Oh, really? Yeah. What is that? OXPS?
OXPS. That's what it is.
Yeah, they've got on the 26th confirmed.
Long or short?
Always long. I don't want that guy in the next podcast. Who was that?
Yeah. We've got Microsoft next week, Office Depot, Amgen, JDS Uniphase, Sohu's kind of an interesting one. I was reading, possible buyout target. There's just just almost everybody is reporting next week. And then next week we've got the beginning of what seems like it could be an interesting new, more, economic numbery week with durable goods, new home sales, GDP, employment cost index, Chicago PMI. Could be some interesting things coming up next week.
And we'll be looking for those Options Express earnings coming out later this week. So just for the record, John said you're long puts right now. Is that what you're saying?
Long puts.
Yeah.
I was gonna say he's slow to answer that one. Maybe they fired him for talking about the stock already.
Yeah.
Full disclosure, I am a stockholder of the company that's employing me. So, I think the big news is going to be November 2nd, November 3rd. I know that's way down the road, and I don't want to hijack around the block for next Thursday. But I've got my sights set on the Tea Party election, or the failure of the Tea Party, because I'm tired of it. And the second day of the FOMC rate decision, I think, is on the 3rd. It's a 2-day meeting. Hopefully get some insight on what's going on. I think I'll be buying puts the morning of the 4th.
Yeah. Bill, are you looking into anything over the next couple of days?
Nothing that really jumps out at me. I always have my eye on the next home sales number, which I see the home sales being at least as important as the employment numbers. So I'm looking at existing home sales Monday. It's not a big one as home sales, and then the case sheller always reports like what it was 3 years ago. That's on Tuesday.
Oh wow!
And then you get new home sales on Wednesday.
So you really think home sales are as important as
well, not as important, but they seem, based on some research I do, they seem to be moving the market and correlating with the hits and misses seem to be correlating with the overall market almost as well as employment data.
Oh wow, that is interesting to know.
Bill, I'm looking at the numbers. I thought for sure you'd be fixated on Luby's Inc., which is reporting on Monday. I think you'd have an inside track on that one. So what should our listeners be preparing for Luby's Inc.? Should we be size puts on that one as well? Or
I would love to say that I'm conflicted out, but I have no relationship with Luby's, although having eaten there down when I've been traveled around south. And my wife can't move from Texas, and she was a Luby's cafeteria fanatic eater. She thought it was the best deal in town. And of course, when she got married, they all assumed that she was marrying into the restaurant business. But they were very disappointed to find out that I had no affiliation.
Are you saying that business consulting isn't exciting as owning a restaurant?
Apparently not. At least that's the perspective down in Texas.
All right.
And with that little bit of silliness, we will close out the Around the Block segment, and we will close out another episode of the Option Block. I want to thank you guys for showing up. Bill, excellent job. We'll have to bring you on again. and let you join our crew of pontificators anytime you want.
I enjoyed it. Thanks.
Thank you, Bill.
To give you another nod, that's VIXandMore.com for Bill. If you want to know more about what Mike Tusaw and the guys at Know Your Options are doing, it's KnowYourOptionsInc.com. Sebastian and his witty 80s references can be found over at OptionsPit.com. Of course, Options Express can be found pretty easy, OptionsExpress.com. And we're over at TheOptionsInsider.com, which is probably where you're listening to this right now, if not in iTunes. And thanks again for listening to this show, and we'll see you again next time.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated, all rights reserved.